Right. Good morning, everybody. Happy Monday. This is the morning show here on Stock Market TV. Spencer Israel, JC Parets, Steve Strazza, Alfonso De Pablos with you on this Monday morning. Hope you had a great weekend. What are we talking about today? I don't know, chat. You tell me. What are we talking about? China, perhaps? Maybe? Probably. China, right? Stimulus. In to quote the Alfonso 5 minutes ago, stimulus always works, right? So we'll talk about that. We had an interesting M&A deal this morning. Maybe we'll get on that as well. Guest today is Steve Reitmeister from Wall Street Zen. He'll be on at 9. Unfortunately, no Kenny today. He's out. He'll be back tomorrow. And that's the plan. Oh, and it's Monday, so we'll have Sam Gatlin on the show as well at 9:30. So that's the plan. Yeah, that's all I got. Here we go. Smash the like. Tell your friends. Wake them up. Tell your neighbors. Wake them up. We're going live. It's happening right now. Oh,
pretty good.
The hell? There we go.
Happy Monday.
Are we good? Are we back?
Yeah, we're good.
All right, ladies and gentlemen. This is, people think that's the Trump dance, that thing. That's actually my kids, the twins. That's how they dance. That's, a little, they had a little chicken, maybe, a little bushwhacker action. So it's like if the bushwhackers, Donald Trump, and the chicken dance all combined into one, that's how my boys like to dance.
They're good moves. Really good
not
moves.
bad. Not bad. The Trump thing is getting a little old already, but the chicken dance is the classic, and the bushwhackers will live forever. So, all right. Having a little debate this morning with our friend Phil Perlman. He says that Bitcoin doesn't give a shit about U.S. politics, and while that might be true, a token doesn't have emotions or thought process because it's a digital token. But my argument was how consistently all of the buyers of Bitcoin continue to stress how they are interested in the U.S. politics. So that was just a little friendly banter we were having this morning in our little friend chat. They're making me sound like I'm crazy.
No, I'm not. I'm actually with you. The people that trade it care.
Right.
So yeah,
the price action is clear, right? The cryptos are trading on political headlines and all these new administration headlines. So,
I mean, I think it's quite obvious. Correct me if I'm wrong. I don't know why Perlman's giving me such pushback.
A little bias. Yeah.
Shout out Phil Perlman. Actually had turkey for Thanksgiving this year. Did not have steak. So I've been breaking his balls about that for years. And Phil Perlman finally coming around. Shout out Phil. Are you going to come see Phil when you come? Are you going to go on a hike with Phil when you come to your Northeast road trip?
Definitely. Always. Phil's always a stop.
Phil's always a stop. All right.
How about China? Nobody wants to talk about China?
We do.
I want to talk about China every day. Nobody wants to talk with me about China.
We do want to talk about it.
3 a.m. I get an alert on my phone. It wakes me up. I roll over. I see more helicopter money in China. I said, this is fantastic. I went back to sleep like a baby. Like right back to like the best sleep for the next 4 hours. So that's great.
Then how come Chinese stocks are down?
They're not.
No.
Oh.
Am I looking at the wrong index? Let me see. Let's see.
You might be.
Bad data.
I was looking at the CSI. I was looking at the CSI 300.
This will be the biggest day since we were momentum thrusting back in September. 6.6% in the FXI pre-market.
Oh, wow. Yeah. So this must have been after the close. Oh, this was after the CSI 300 close. There you go. All right. How about that? One for the good guys. See, that's why this is real live video. And people are like, I was having some meetings last week, some business meetings. There was business papers. And they were asking me, they're like, JC, how do you commit to doing a morning show every morning? Like, that's quite a commitment. And I just explained, because these are people that are not like us. These are like more like business people, not market people. And so I'm like, we're doing it anyway. Like, I'm talking with Strazza about what's moving, what's not. He's pointing out what's on his radar. I'm pointing out what's on his radar. We're talking with our smart friends. Like, That's what the morning show is. It's what
Yeah.
we're doing anyway, right?
That's
And like, you know, they were kind of like coming around, but they were like, still though, you know, because if you're not one of us, right? If you're not one of us, it's hard for you to understand that. But this is real. This is real.
No, I agree.
And isn't it nice that it's real? Like, you know, like there's these people that still watch cable, like basic cable TV. Like if it's like freaking like 1975, it's very, very strange. And what the people that make those shows do is they have like meetings where they talk about what they're going to talk about on the show. And it's like this whole to do, and there's like scripts, and it's like A block and B block. I know because I've done these shows, I've hosted them, I know how it works. There's a reason why it sucks, and nobody wants to watch your stupid shows. It's because it's all a fugazi, right? This is real, folks. This is real.
I think part of the beauty of the morning show is that we're not preparing, right? We don't have an outline. We don't have a script. We're not hitting.
We kind of have like, we know
Mu-
that
much
Righty's coming
to-
on at
mu-
9.
Much to some people's chagrin, yes.
And
Like,
Sam's
but-
coming on in the afternoon. Like we have a thing.
We try,
Yeah.
but this is pretty loose, is what I'm saying, and that's nice. We're all just on here each morning, going through the news, and figuring out the situation together. And
Yeah, that's what I'm doing. I'm going through the news. That's what I'm doing.
you are, whether you know it or not. This is your version of going through the news. You might not know the headline.
This is true. This is true. All right, Spencer, shall we, my friend? Shall we?
Is reflected in the price.
Spencer's pregnant.
Fantastic.
Right.
So
I
good.
love that you're pregnant.
Me too, buddy.
You better be
Yeah, me
enjoying
too.
your sleep, my friend. I
Me
hope you're
too.
enjoying your sleep.
Yeah, I'm trying.
Send your wife my best. Also, I hope she's also enjoying her sleep.
I will send.
'Cause after
JC
that-
sends his best. Okay.
No
here we go.
mas. No mas.
Yeah, all right.
All right, ladies and gentlemen, we have the Dow futures doing nothing this morning, up 30 points. That's a 0% move this morning, 44,750 for the Dow. S&P 500 futures also down 0% this morning, just an eyelash under 6,100 for the S&P 500 futures. NASDAQ 100 futures down 0.1%, 21,620. That's 35 handles to the downside for the NASDAQ. So not much happening in the equities market. Bond futures, 30-year bond futures down about 0.25%, just under 120. Crude oil futures up 1.3%, just slightly above 68. Copper up 2%, just around 430. Gold up 1%, just under 2,700. Silver up 3% this morning, 32.50. Silver acting great, with the volatility index up to 13.4 this morning on the VIX. Over in funny money land, you got Bitcoin, 99,000 for Bitcoin, just under 100,000, down 2.2%. Ethereum, 3880, down 3% on the day. Solana, 230, down 3.5%. Binance, 730, down 2%. Total crypto market cap, Mr. Spencer Israel, 3.51 trillion. 3.51 trillion, with the Bitcoin dominance still under 56%.
Yeah.
How are we feeling about this morning's futures, Mr. Spencer, Mr. Strazza?
I don't feel about it then. Really, I really just again, like Steve said, the story today is going to be China.
Yeah, it's huge.
Yeah.
Even
what a
though
move this morning.
I will add, if you look at just the pre-market action, the overnight action in these stocks this morning, you know, they all have a pre-market high from a couple hours ago. So let's see if that high ends up being the high of the day or not. But
Dude, you know how sometimes like I
6
do
a.m.
my late night charting like on Friday nights and stuff because I can't wait till the next day to get my weeklies in. I do it, you know, so then I'll go on the Perma Bear Spaces to see like, you know, what they're angry about that evening. And so I don't quite know what they were angry about.
Yes.
So I was just listening to them, and so they bring me up. I should start doing this anonymously so that, you know, I can continue my charting. So they bring me up and they start, you know, they start hating on everything. It's about how China is terrible. I was like, oh, we're buying China very, very aggressively because obviously we were doing that last week. Dude, these people think that I am like crazy, like bananas crazy. Like JC has lost his mind because he's buying China. Not only buying China very aggressively. And they're like, oh, no, but it's just a trade. I'm like, nope, it's probably a long-term investment. This is probably it. There are going to be a lot of trades along the way. Dude, they like their heads are exploding. They think I'm so crazy. And when people think I'm crazy, I've been around for, 20 something years now. When they think I'm crazy, I'm usually onto something.
What I have learned in the couple of years I've been with you now is it actually is probably I think most people probably overestimate how often or how aware they are of the current trend, right, in a given asset, right? Because the narrative in China it was from 2021 and 2022 is still pervasive, and it's still all these stocks are still well below their highs, their COVID highs, right? All of them. Well, maybe not all of them, most of them, right? So, and so that's still the mindset, even though we've had instances this year of huge gaps up and momentum thrust and all that, and if you look at year to date, some of these stocks aren't half bad. The narrative from a few years ago still persists, and people probably just haven't looked at the chart all that recently. They just assume because it's still below the highs, the prior highs, that it's the same thing, right? So,
and there are people like that. That's how they think. It's really weird. You saw that a lot, like in small caps. Like you've got these perma bears out there being like, "Oh, small caps are still below their prior cycle's high, so this is just a bear market rally." I'm like, dude, what kind of serial killer thinks that way? Like, okay, so now the small caps are above the former cycle's high, so now it's not a bear market rally anymore. Now it's a bull market. It's the dumbest shit I've ever heard. We're year 3 of a bull market. Like if you're waiting for every stock in the universe to get above the prior cycle's highs, like you're never going to participate in stocks. Like that's no way to go through life. Fat, drunk, and stupid, right? As they say.
So I just want to make 2 points here, along just in line with what you guys are saying. JC, basically, you're talking about the narrative for China is that these stocks are uninvestable. Yeah, share that in the chat. We wrote about this a few months back about how we love it when there's some sort of theme that's picking up and the technicals are there, and then the sentiment is just bottom of the barrel, uninvestable. Right? That's China. Coming off of that, where JC's getting yelled at in Twitter Spaces for being bullish China.
Not yelled at, laughed at.
Even better, right? That's far better. So then what happens? We come off the lows in August. Bang! Huge momentum thrust. Do we have that FXI chart? Best week in history. Best 5-day. Best 10-day. All the rate of changes. Best. Right? We call these momentum thrusts. They speak to the initiation of a new trend. When we look to the chart, we say, which way is that trend heading? It's got to be up. There's a nice base here, right? This is one of the most textbook ways that you kick off a new trend, right? With a big momentum move. So 18.5%. And then flip it to, do we have the relative trend? We also saw this on a relative basis. And then what happened after all those fireworks back in September? Just a huge corrective phase. Everybody forgot about China. David Tepper's getting made fun of on the news now for his buy everything in China call a couple months back.
Let me tell you something. David Tepper is the man.
Yeah,
so anybody who wants to make fun of David Tepper, knock yourself out. But nothing but respect coming from this guy.
And if you look at the chart of China, all that we did here in this little corrective wave is retrace about 62% of the prior advance, right? So it's very, very standard corrective action. And now I think the new uptrend continues to resume. And you're seeing it today. Lovely. Good one.
I got to tell you. So the breath thrusts happened before the Republican sweep, right? So there was already market already leading into that. And then post Republican sweep, you did not get a China sell-off like one would think, right? Held in really nicely. All of those things combined.
Remember you were asking that question too? Because we were seeing a Trump victory get priced in with the banks and the cryptos, right? And we were talking about this. And then JC was up here saying, why is China doing so well? Right? And we were like, and I think the way to think about it back then, hindsight's 2020, is China's doing well in spite of, Trump's odds rising or whatever. Right? Wasn't that really the signal?
Yes.
In the face of it.
That's right.
Look at that thruster.
I mean, that is serious, man. So, we've studied this. We've talked about this a whole bunch. These are things that you see at the beginning of cycles, right? These are not evidence of exhaustion. These are evidence of, you know, very, very aggressive accumulation to the point where we have never seen accumulation this aggressive in the history of Chinese equities.
Yeah. Yep. And
but JC, you know, the debt and the consumer, and the tariffs. That's the best one. That's the new one. Have you heard that one? This is the tariffs. The tariffs. That's why it's a bear market, because of the tariffs. It was the taper and the sequestration, and right. It was like there's always like this thing. Now it's the tariffs.
The tariffs that we should add haven't even happened yet.
Something else.
Spencer, you'll see that when the crash comes, you're not going to have enough time to do anything about it, because it's going to happen overnight. You're going to wake up and the earth is going to be it's just going to be over, and you're not going to have any time at all. There's going to be no warning. It's going to be immediate crash, right?
You know what? Another thing that's not too unusual to see at market bottoms: stimulus.
Stimulus. I don't know what that means, but the tariffs make me laugh.
I'll tell you what the stimulus means.
Tell me what the stimmies. Do we get stimmy checks? I never got one. Did you guys get stimmy checks? I never got one.
Yes.
How much were they? $600?
It was like $600. Yeah.
All right. I guess I didn't miss much, but I would have liked to get my $600. Did I not qualify? How does that work?
I don't know. I don't remember. That was
dude.
Do you realize that this was almost 5 years ago now?
I'm still waiting for mine.
Your accountant probably took a credit for you on your taxes. You probably don't.
Oh, is that what happened?
Do you want to know what stimulus means?
Question. I hope
so.
Probably. All right.
We have some stimulus this morning, JC. There's ample capacity.
Who's we? China?
Yeah, there's ample capacity. That's the direct quote. There's
long communism, short capitalism continues to work.
Big guns. Listen, we talked about this. The first stimulus news, right? We said they're going to keep coming out and announcing more and more stimulus until the market reacts the way that they want. And if it's not good enough, you'll just hear another announcement of stimulus. So here's the latest, and there's probably more to come.
Yeah, so there's a few things here. It's what Steve said. It's helicopter money, right? There is ample capacity for budget increases to increase the debt and the deficit. They are going to they announced a $1.4 trillion program to refinance a whole bunch of local government debt. They're going to work with the president to discuss GDP growth targets. That's always fun. And there's more things that these headlines are usually pretty vague, but that's the crux of it right there. So basically, we are prepared. We, the CCCP, are prepared to spend gobbles of money, throw it at our economy, see what happens. I don't know.
Gobbles of money. I see what you did there, Spencer, here Thanksgiving, during the Thanksgiving holidays. I see what you did there, Spencer. Don't think that goes unnoticed.
That was not my intent.
You're going to be a dad. You better step up your dad joke game.
Oh, my game has been strong, but it's Christmas time now.
We need stronger. That guy that had 99 problems, now he's got 100. You know?
No. I saw that joke last night already.
That was, it's tough to make light of something as horrible as the accusations, but if you're not laughing, you're crying, right?
That's how I go.
Is that what they say? Is that what they say? Okay, can we talk about how easy it is to generate no alpha by investing in technology stocks?
Only in the last
few months. If you are into generating zero alpha or negative alpha, if you're into that sort of thing, technology stocks have been a great place to accomplish those goals. Can we talk about that?
You know where I stand on this.
Just clarify in the second half of the year. Just clarify that.
Nope, for a year and a half already.
It requires further clarification.
Small cap technology has been underperforming for 18 months. 18.
Bro, small caps.
I don't know about that. I don't know about that. Because, hold on, Spencer knows this. We have been killing it in small cap technology.
Strazza thinks that like the rest of the world is him. Yes, I know. It doesn't matter.
No, you think the rest of the world is you.
At the index level, if you've been looking to generate negative alpha, technology has been a great place to do it. At the small cap or large cap level, facts only. Facts only. Now, with that being said, we saw something very similar in consumer discretionary this summer. And what were we doing then? We were buying up them consumer stocks, and boy, did that work out well for us. I have a funny feeling that we're going to see something similar in technology It's a bull market. Study every bull market over the last 100 years, and you know what you're going to find? Technology is a leader and an outperformer throughout almost every single one of them, like all of them. So are we going to bet that technology is going to just continue to underperform in the middle of a raging bull market? Or is sector rotation, in fact, the lifeblood of a bull market, and this rotation is coming?
I think they got to dig in here. I think big rotation is coming for the laggards in tech, the ones that you're speaking of.
Yeah.
You mean like NVIDIA?
I'm talking specifically about the indexes.
Yeah,
the lagging indexes.
Because you're talking about PSCT mainly. Is that fair? That's really your measure for this.
Talking about XLK, RSPT.
Right. I'm worried about small caps. So you're talking more about PSCT, but if you look at small cap growth, it looks pretty different. It looks a lot more like ARC on a relative basis.
You see high beta versus low volatility turning.
No, like PSCT just seems like a weak index right now. I don't know what's dragging that down, and why small cap technology looks so much worse than small cap.
You know why? Because those small cap technology indexes don't have any large cap tech stocks in them.
Yeah, but neither does small cap growth. I think it's more the point that
discretionary's already been going, and small cap discretionary has been working.
Discretionaries are in there driving it. Yeah, XLY looks so good.
All right, so let's go through these. Let's go through these.
My golf buddies are into the TSLL. Tesla?
The Tesla?
Yeah.
Is that the double?
The double Tesla? Yeah. Spicy.
You sound like one of these guys from Brooklyn. You know how they just add R's to words randomly?
Yeah. Yep.
That's how you sound.
It's the best accent of all the accents.
Brooklyn?
Yeah.
And by best, you mean?
It's hilarious. It's
very
just special.
aggressive.
It's special.
Dude, I want to get one of these guys from Brooklyn or Staten Island and stick them in a room with someone from, like, I don't know,
Kansas?
2.5 hours away from, like, Dallas. Like, just not Dallas, but, like, out there. And just stick them in a room together and see if they can communicate at all.
Yeah, it's the far apart.
I was friends with this guy from Cranston, Rhode Island. Very, very thick accent. I went to one of my college buddies, and he was crashing at my place in Hoboken, like 20 years ago. And my mom was in town too. So like they're drinking coffee in the morning together. And my mom has a thick accent. And his guy, neither one of them could understand a word they were saying.
I have a question for you guys.
His name was Hot Carl.
Hot.
That was his nickname, Hot Carl. Isn't that a terrible nickname?
Slide one. Check this out. I was promised that these were terrible stocks, but this has been one of the most epic rallies I've ever seen. Dude,
I thought we were going to talk about rotation into technology. Now we're going airlines?
Yeah, we're just going straight to airlines. 18 straight up weeks for United Airlines. This rally has now put the stock 175% at new all-time highs. Momentum has been more or less in overbought range for 3 straight months. If you could only buy puts or calls on this chart, which is it?
I could only buy puts or calls?
Yeah.
Are
you betting on a break? Are you betting on a break or a failed break?
I don't know. It depends on which account, honestly.
Listen,
in my YOLO account, I might buy some puts, right?
I did. How could you not?
Can we please move on to the technology, please?
You mean move back to the technology?
Please. I mean, this is important.
You don't like the airlines?
You guys are sitting here. You guys are sitting here talking about airlines.
You're not entertained? Delta Airlines too, all time.
Yeah, when I was saying that, it's time to buy airlines at those lows and rotation, transportation stocks, and everybody laughed at me. Yeah, I remember well. So now let's move on because this is old news.
Listen,
old news.
Steve, give the RSPT some RESPCT, all right?
Ooh, Spencer, you're funny today.
Wow, Spencer, Israel. Man, you are pregnant. Are you sure there's no twins in there?
I told you.
You sure
my dad joke game is strong.
Man.
What do we got? What do we got?
So this is the equally weighted technology index making new all-time highs. So this is a large cap technology, and on a market cap weighted basis, 3 major components, NVIDIA, Apple, and Microsoft. This completely eliminates all of that from the equation. And here we are making new all-time highs.
I'm into it, JC.
All right, now here's the chart. This is the chart. And we got good charts around here, but this one, my friends, this one right here, this is the chart. This is the chart that I think this is the best chart. The best chart.
We've been talking
You know
about
how
this.
Strazza is always talking about the best companies, the best sectors. This is
Listen,
the best chart right here, Strazza. Tell me I'm wrong.
I think you're right, and you want to anticipate this top failing because we've seen this pattern fail over and over and over again. I'm talking about the blue line. However, remember that momentum in July and then again in August on a relative basis, right? We were out here saying, "Wow, this is the biggest, single day performance gap we've seen between large cap tech or the Nasdaq 100 and small caps or the broader market." Remember that? So this was like big momentum in terms of the rotational theme on a very, very short-term basis. But we saw it a couple different times. I think even semiconductors have had like their 3 worst weeks on a relative basis since the financial crisis, since this summer, right? So there's strange stuff from a momentum perspective in these relative trends, which has me doubting a little bit whether or not these will be completed tops or failed tops. So I'm watching them closely. And I don't think it's as solid of one of those failed top setups as some of the others that we've seen, right? Just because of that downside momentum that we saw this summer.
And then what about this guy here? Throw up the new slide 8 there. That's that big top in semiconductors on a relative basis. So it looks a lot like that blue line that we're just looking at there. This is semiconductors on a relative basis. Does this top complete in the middle of a bull market?
Yeah, so that's a big one.
Tough bet to make, right? Tough bet to make. I don't know. I think you got to dig in and buy them.
No, I agree. Listen, I'm pointing out that downside momentum because it's strange.
What about this base in small cap tech? Throw up that slide 9 there.
Do we have that weekly rate of change semis chart?
Does this break out?
What?
Does this look like a top? Doesn't look like a top to me, man.
No. Sweet base.
Huge base, bro. Huge base. Next chart, Spencer. We'll do a little discretionary, and then we'll bring on righty. So this one is a great chart because people tell me that the consumer is broke, can't afford anything. Amazon is driving all of the returns in consumer discretionary and Tesla. And I say, yeah, you sure? Because these charts here eliminate Amazon and Tesla completely out of the equation. Like they might as well not even be in these indexes. They're so small and irrelevant. So this is the equally weighted consumer discretionary index, making new all-time highs, completing this multi-year base. And then discretionaries relative to the consumer staples, again, on an equally weighted basis, breaking out of this multi-year base to new all-time highs. So I love the fact that people think that the consumer's broke and nobody can afford anything, and America is broke AF. That's what the kids say, broke AF. And I'm seeing this. I love the dislocation between the narrative and reality. I love when that happens. Like the tariffs and the tariffs and the China, right? Imagine not owning Chinese stocks because these things called tariffs make you sad. Like imagine what kind of serial killer thinks that way. Fortunately, we laugh at that sort of thing, but the fact that people are butthurt about things called tariffs and China's ripping at the same time is a similar dislocation in the narrative as we're seeing in discretionary. I'm a big fan.
Here, throw this one up. Slide 1.
How about those Jets finding a way to lose? Shout out, Phil. Jets. There it is. So this is semiconductors relative to the S&P 500, and we're looking at a daily rate of change. Why is this interesting? Explain this to me.
So the 3 worst days for semiconductors relative to the broader market occurred since this summer, since really this top has been forming. The 3 worst daily performances on a relative basis in 10 years. That happened over the course of like 3 months. That stands out, right? Like if you look at that rate of change in the lower pane and you see it clustering to the downside, right? All those big down days, almost looks like financial crisis. So Worth
Would
keeping
this
in mind.
be like capitulatory?
I think it was just big profit taking and rotation, right? I think this was the end to that thin bull market, right? Where some of these stocks, like they just poured into these semiconductors and nothing else. And I think when they started rotating that money out, it really made a splash on these short-term rate of changes. Because
Yeah.
we had basically these days were semiconductors down 3%, rest of the market up 2%, right? So it was just like it was very weird dynamic, and it happened a couple times this summer. So
Yeah. Sector rotation, right? We see it
yeah.
all the time. Shall we bring in one Mr. Steve Reitmeister? It's the Reitmeister making copies.
Let's do it.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here. Hello there.
Righty.
How we doing? Hey, boys.
Morning.
Ladies and gentlemen, one of my favorite technical analysts, Mr. Steve Reitmeister.
Why do you do that?
Oh, because it's fun. It's fun, righty?
Yeah.
Oh. Steve
you
Reitmeister,
gotta-
a big fan of the greatest momentum strategy of all time, the S&P 500, buying more of the best stocks, kicking out the worst ones. I mean, momentum investing 101, righty. Love you, brother.
Good to see you, boys. After another, you're talking about the Jets. How about my Bears, right? Finding miracle ways of just looking like the worst team on the planet. 7 in a row in the tank. It's, oh my goodness.
Righty, so I have a theory.
Yeah.
You know, when you talk about seasonality of markets and, you know, bad things happen in September and October historically, as we know, and all that stuff. You know, I think it's because people are distracted because they think that their football teams are not going to suck, right? So they're distracted. They're watching their football teams. By the time November comes around and their teams suck and they're out of the playoffs, they focus more on the markets, right? Like what you're describing here, right? So that's my theory. And by the way, I'm not just making that up now. I talk about that every year.
Yeah. I think it's I think that whole September thing, that's like ghosts of like, bear markets past, right?
29,
Financial
87.
crisis and all that kind of thing. And then it's just the good tidings of, the holiday season. Everyone's just in a slightly better mood. And it's not like a rip roaring, generally, it's not a rip roaring bull market in November and December. It's just kind of like not much of a reason to go down. And it's just drip, drip, drip in the positive direction, or the melt up concept. And there you find yourself at new highs once again. So yeah, I think we're seeing that for sure right now. It's hard to call it a breakout above 6,000 because I think we're going to find ourselves back below when people take profits in January.
And you think people are going to take profits in January, not February, like they historically do? You think that starts in January?
Yeah, no, I think there's too much on the table, right? So you and I talked about this last time. So yes, this may not be the best first 2 years of a bull market, but it also, we're coming off not that much of a bear market, right? The bear market didn't go down as much, so you don't have to bounce as much, but 70% in 2 years, kind of hard to complain, right? So
I think there's only 5 or 6 times in the history of the U.S. stock market that a 2-year performance is better than these 2 years. So pretty good.
Right, exactly. And so people sitting on some big profits, I think, I think the mega caps take it on the chin in January, maybe February, whatever. What I'm saying is, to begin the year, I think we begin with a thud for the broad markets, but small and mid caps, which have underperformed until November, I think that's the place to be, right? That's where the only value is in the market. And I know you technical analysts don't want to talk that much about value, but in general, institutions will chase value over time. The only place to look is small and mid cap.
Righty, why don't we back up a little bit?
Yeah.
Some of the folks might not be familiar with one Steve Reitmeister,
What?
aka Righty, aka frustrated Bears fan? No. Why don't you tell the folks a little bit about your background and why I break your balls about being a technician, because you're the opposite.
Yeah, my father was a financial planner, and I had full intention of becoming a mutual fund manager out of college, but I got so drunk and high I forgot when I got out of school what I wanted to do, right? And then I found my way back to the stock market. Spent nearly 20 years at Zacks Investment Research, and Zacks is just very focused on earnings. And there's nothing more fundamental than that. So, right. So you make fun of me for my fundamental roots, but the beauty of the Zacks model is that earnings estimate revisions, following the money of what the analysts are saying, the stocks that are seeing positive estimate revisions are very timely stocks. The money will chase those stocks. And so chartists happen to love that model for, finding fundamentally sound stocks that also have good reason to keep moving higher. So that's kind of my background. Fundamentally based quantitative investing, using things like the Zacks rank historically, and now the new Zen ratings model that we created for Wall Street Zen. But narrowing the field to the most fundamentally attractive stocks, but yes, wanting them to be timely, wanting to be in stuff that's going to move in the next 1 to 3 months. So that's where you and I marry up a little bit, is trying to find.
I'm more of like, I'd rather be in the names that the fundamental people hate, right? So like, I'd rather be in, you know what I mean? Especially depending on where we are in the cycle. Like, I really like when the fundamental people can't wrap their heads around like the price action. Like MicroStrategies is a good example. Like, they're like, this is a Ponzi scheme. I'm like, great money to be made in Ponzi's,
However, okay, so I dig what you're saying, the contrarian play, because often that's where things spring up, right? When people are struggling.
I'm into that sort of thing.
But okay, but how many times have you seen where a stock has, let's say, a short position of 10% or greater on its shares, and it's just a death grip? It's just a death grip on those shares. The shorts are in control, no matter what. They can just blow it out in earnings season, and that stock can't move. So what you're saying is great when you get it right, but too often you can be right on paper, but here again, they have a stranglehold on the stock. So
folks, if you're listening out there, what
that?
Righty's saying is spot on. Just because there's a high short interest, just because there's a high short ratio, doesn't mean it's a buy. So the way we overcome that, Righty, just so you know, because you're spot on, is that we sort those things by rate of change. So we actually don't start to participate until it starts moving to the upside and the shorts are literally getting squeezed. So that
there you go. Okay.
So that's how we overcome that. But let's back up a little bit on the fundamental side. So at Zacks and at Stock News and now, like your ranking systems, you have a lot of experience building these rankings and everything like that. I'm very curious to know, which fundamental inputs have you found that are most important, that maybe you overweight compared to others, or just selfishly, like you've noticed, are really important? Like, which metrics do you look at?
Yeah, so the current model that we're using has 115 different factors. When you have that many in there, there's nothing that has more than, I think, like 9% is the highest for any individual. So they're not equally weighted, but 9%.
9% is a lot, though. That's a lot.
So think about it this way. There's 26 different measures of financial strength: ROE, ROA, debt, R&D spending. 21 measures of growth, not just earnings growth, cash flow, profit margin, revenue, consistency of that over time. So the point is, there's not any one, right? Because that's the beauty of using a quantitative system. Why have 1, 2, 3 advantages in my favor when I can have 115, right? And that's the beauty of a model as complete as the Zen ratings that we created. And it's very similar to the power ratings that you remember back from the Stock News days, right? So much more complete, a 360-degree review of a stock: value, growth, momentum, sentiment, stability, and financial strength, right? And most recently, adding in AI factors, what's moving the market, trying to find stocks that are in play. That's what the AI is very good at, seeing those relationships. And that's part of the new model. So you can't hang your hat on any one thing. It is really the totality of all the things the computer finds that points to outperformance, and that's your advantage.
Can I ask you this? How is your rating system different than like a Can Slim, like the IBD, William O'Neill stuff? Like, how do you differ between the two, or are there a lot of similarities?
So I think, the beauty is with Can Slim, it is a well-rounded model. How many different things he's looking at? Sorry, concepts, but really the number of factors is like 7, right? So the thing is, it's a little incomplete. So all my years at Zacks, and very proud of the things that we did there, there's only 4 factors. There's only 4 factors in the model. How can that be as robust? How can that really be tuned into what's going on in the market with just looking at 4 factors? So that's my complaint with Zacks. That's my complaint with Value Line. That's my complaint with Can Slim, is just not looking at enough. And so much more of the modern models putting in more factors, more odds in your favor, that is going to find stocks of true merit and upside potential.
Steve, do you find that people, maybe not like people watching this show, but people generally speaking, overrate the importance specifically of the PE ratio? I see a lot of stuff on the internet about PE ratio as if it's like a magic number. People think it's like a magic number, and the PE is high. It's uninvestable. It's too high.
Yeah.
It's too high. It's too expensive.
It's such an oversimplification, right? So
Exactly.
Even at my deepest value days, because that's where my dad was at. That's what he taught me, reading The Intelligent Investor.
Yeah.
From Benjamin Graham and stuff like that. It never made sense just looking at low PE, because it should be relative to growth rate. So NVIDIA should have a much higher growth rate than Foot Locker, right? It should have a much higher PE than Foot Locker, what you're paying for that future growth potential. So low PE, if you were just focused on that, you're going to have some really boring ass conservative, consumer defensive, utility kind of stocks, and you're not going to make any real money in the long run. So PEG, right? So if you're going to be a value guy, PEG is much more interesting. What am I paying for each unit of growth? So therefore, yes, a company growing earnings at 20% a year should have a PE that's relatively twice as high as a company growing 10% a year. And that's so PEG is better. But here again, in our Zen ratings model, we have there is 21 factors of value, right? So why just hang your hat on PEG or book value or price of sales when you could have all of them looking at it relative to the overall market?
I agree with this comment that Josh made in the chat, that the PE ratio is the fundamental analyst version of the head and shoulders pattern, right? It's the first thing you learn, and also it's probably the easiest concept to understand. Therefore, people just stop reading beyond that.
Misunderstand.
Yeah.
Okay. Yeah. So people just stop reading beyond that, and they don't even understand how to properly use these tools, or the fact
whoever said that, I like that. I'm going to use that.
Yeah. Josh, it's just one thing. It's just one thing in the toolbox, right? But people are stuck comparing, today's, a PE in the stock today to the same stock 10 years ago. It's so extended. It's so high. It's so expensive. But that's not even how you're supposed to use it. You compare it to its peers, or like you said, compare it to the growth rate. And yes, PEs do go up. That's kind of what they do because valuations go up, and that's part of the process, right?
The best use of PE is looking at a sector or an index, right? So if I say that mega cap stocks, the Magnificent Seven, has a PE of 35 as a group, and we look at that historically, we say as a group, that's very high. Or the S&P 500 being at 23. 23 is not bubble, but it is on the high side of historical norms. So that's why I'm saying I expect 2025 to start with a thud, because those groups which have dominated the market, they need to see a little air taken out, right? And then small caps and mid caps are smushed together at about a PE of 16. By relative value, that's the group to be in. But using it for individual stocks, it's just kind of silly without taking into account your growth rates, what industry they're in, and all that other kind of stuff. Yeah,
Exactly. And yeah, a high PE can stay high, right?
yeah, sure.
There's no rule that says it has to come down. It can just stay high, right? So I just see a lot people treat it like it's a magic number, and it's so not. And you know, I can't imagine thinking that I'm right and the entire market is wrong simply because I think that one number is high, right? Like I just can't imagine thinking that, you know.
Can I show
So,
4 charts that I've got? We'll
please.
show them quickly, and then I want to hear your thoughts, Righty, because to me, like I see this sort of thing. I see it for years, and I laugh about it.
Yeah.
You know, but I love the devil's advocate. I love the pushback. You know, this is what we do. Like I don't want the world to agree with me. Quite, you know, the world usually doesn't agree with me, which is fine. But this is where they disagree, Righty, and I want to hear your thoughts. So 4 charts. We'll just go through them quickly, and then we can come back if you want to dive into one of these in particular. So slide 14 through 17, Spencer. So throw those up. Then I want to hear Righty. So this is what the bearish community, the ones that tell me that I'm crazy because we're buying stocks. By the way, not all of these are new. If you want to zoom in totally there, Spencer, so people can really see what's happening. These are not necessarily new concepts, but the concepts that I've been given
for
quite some time now. So the first one is the 4th highest S&P 500 trailing PE in 124 years. So that's why we need to be selling stocks. Next chart. The next one is the S&P 500 price to book ratio. Price to book, okay. Now exceeding the March 2000 high. So we need to be selling stocks. All right, next one. Then you've got, of course, the U.S. stock market concentration. Of course, an old classic. This one's been around for most of this bull market. New record highs in 2024. Top 10 companies as a percentage of S&P 500 market cap. So this is why we need to be selling stocks. And then the last one is the U.S. versus the rest of the world hitting new 75-year highs for the U.S. relative to the rest of the world. And that's why we need to be selling stocks. So all of these things, most of them have been around for most of this bull market, telling me why I need to be selling stocks. I look at it, I laugh, and I go buy stocks. And that has been working out really well. So, Righty, are any of these not insane? Like, do any of these have actual validity where we actually should pay attention?
So roll back. I think it was the first or second one. You just go back.
I was hoping you'd say book ratio because
let's go with this one. Yeah, so it's showing that the current PE for the S&P 500 is about 25. I said like 23, and that number I hadn't looked at in a little while. But here,
this is trailing, right? So
I always deal with forward. I prefer forward than trailing. So yeah, on a forward basis, it's about 23. Okay, so yes, this is on the high side, but it's not a case of that the market can't support it. One is that history shows that people underappreciated stocks versus bonds, and so the discount in stocks has been decreasing over time and allowing stocks to be higher relative to bonds. So a lot of the historical stuff going back, let's say before the 1990s, is worthless. Okay, the idea of PE. So the thing is, can we afford a forward PE at 23? Yes, but it's slightly on the high side. What is missing from this is that the S&P 500 is not the entire stock market. There's 10,000 stocks we can get our hands on. And when we look at mid caps and small caps, it's saying with a forward PE of 16, that is under the historical norm of 18, right? And certainly a value versus the large caps. So here, it's just that everyone's been ganging up in the large caps, ganging up in the Magnificent Seven. That party is over. And I'm not saying they're going to implode. I'm just saying they're going to underperform as a group. Okay, because they've had their fun, their time in the sun. Some profits are going to be taken out this year, and the money just going to go somewhere else. That's it.
So talk to me about, this is the only one of those 4 that you think has any validity at all?
Yeah, because so this is why people are crying about the valuations. But what's missing is if they showed the rest of the market, if they showed what the PE was for small and mid caps, which I said is 16. that's value. That's in a bull market, we should be talking about PEs around 20. So if small and mid caps are 16, back up the truck. That's it.
All right, so you can take out these perma bear charts. So Righty, talk to me about 2025. The year of our Lord, 2025 begins in approximately 3 weeks.
Yeah.
As investors, as traders, as earthlings, how should we be thinking? How are you thinking about entering the new year? Is it going to be like the last two? Probably not. Right?
No. Yeah. So there's a tried and true pattern of the stock market exploding off, bear market bottoms. The first 2 years are glorious. And then the third year is kind of a breather. It's kind of like for the S&P 500, it's let's just say 0 plus or minus 5, right? And that's fine. After rushing up 70% in the first 2 years, that is fine to take a breather. Now, here again, that's the S&P 500, because it's been not just the past year, it's been 4 years of small caps lagging the large cap index. That money's just going to rotate. That money's just going to rotate to that other group. Here again, but not just every small stock. They still have to be healthy, growing companies, right? So they have to prove it each earnings season, but that's the place to be. So what do I think is the high in 2025 for the S&P 500? 6,300, right? And I think we spend most of the year under 6,000. I think like struggling underneath that. And there's people just looking elsewhere for a rate of return. So small caps, I bet the Russell 2000 goes up, let's call it 10 to 15% next year. Yeah, sure.
Yeah.
Just a little bit of catch up.
What about the sectors themselves? We were joking before, but like joking, not joking, how if you're interested in not generating any alpha at all and a negative alpha return is your goal, then technology stocks have been a great place to do that, right? Which is wild. And we're in the middle of a raging bull market, and technology has been a massive underperformer, small caps especially, but large caps this year as well.
Yeah. So
it's hard for me personally. It's hard to make a bet that underperformance is going to continue. Yeah. We are buying technology. We think sector rotation is in fact the lifeblood of a bull market. Yeah. We're buying tech stocks here. We think rotation is coming. If rotation comes in, is that a bad thing for the market where the biggest sector is now a leader again?
Yeah. So I'm in the risk on camp, but risk on small and mid cap, right? So risk on, you can't be risk on without thinking of technology, right?
Right.
But the idea is not overpriced technology, because there was a lot of, just kind of people just buying things and just raging higher. And there's AI involved. Well, there's AI involved in everything now, right? So how much of a premium are we going to be paying for that? So risk on equals economically sensitive industrials, materials, sometimes energy, but that's a weird one right now. I'm not a big fan, but maybe have a little exposure.
It's always weird. Bull, bear, it does. Yeah. It's always like its own thing.
Yeah. Consumer discretionary. I heard you talking about that before I came on. As long as people have jobs, the American pastime is shopping. They will absolutely shop. And
my wife will agree.
Yeah. And if rates come down, right, then the bigger purchases, cars, jet skis, mobile homes and other kind of things, those become a little more, more affordable as the rates on the loans come down. So that end of consumer discretionary looks pretty good. Financials, right? Financials is a healthy place to be as rates come down, especially if it's true that Trump is very anti-regulation. He certainly has tapped some people who are planning on stripping out some regulation out of the financial industry. So those are some pretty good places to be, I think, in the coming year.
Righty, you mentioned the administration, not to get all political and everything, because people in the chat their heads explode when we start talking about politics.
Yeah, I'll be wary.
So
One of my friends was telling me this morning that Bitcoin doesn't care about U.S. politics. Everybody who's buying Bitcoin on, on these podcasts, these billionaires keep talking about how it is. So, I mean, it seems to matter. Stock market absolutely ripping. How do you think about the new administration, the new cabinet? Like, a lot of haters on the Democrat side, that were like preventing M&A, crypto, anti-crypto, like what you were just saying. Like, do you think that that's just narrative, or is there something there that the market likes or maybe dislikes less?
Yeah. So this is not a shock to anyone. Politicians talk a lot of smack. They talk a lot of things that they're going to do when they come into office, and 10% tops is all they accomplish. In this case, with Trump having the House, it's a Congress and Senate, and the Supreme Court in his favor, he can get a lot accomplished without compromise, right? So he can probably get more things done on his agenda. He seems to be pro crypto, but yes, I think the whole crypto mantra is like, screw the government, who cares, right? This is something outside of that. So I think just cryptos is just an interesting bet on the side to see what happens, but not because Trump is in office. I'm not buying that one. The most interesting story is the tariffs when it comes to the Trump administration. We saw in his previous, when he was president last time, he did work a little bit on that, and they're negotiation tactics. I'm going to raise tariffs 100%. Yeah, that's just a starting point in the conversation, and then they get to the table, and then something more reasonable will be accomplished, because it doesn't take a rocket scientist to understand that higher tariffs equals higher prices on the U.S. consumer. And by the way, the Harris lost is this idea of the economy was in bad shape. Sorry, there's a lot of reasons, but the main thing that people were hung up on was higher prices, right? Was inflation. So the last thing that he should do is something like much higher tariffs, which sparks inflation, which will not look very good the next time he tries to get elected.
Are you in the Pepe the Frog or maybe Peanut the Squirrel? Any of these meme tokens? Do they fit the bill in your ranking system?
I'm not.
I had to ask, Righty. I had to ask. I can't help myself, my man.
Yeah, I'm an old man. I don't. You youngsters deal with that shit. Sorry.
Let me ask you this, Righty. When we were hanging out in Chicago a couple months ago, the rooftop in right field in Wrigley, how sick was that, dude?
The great setup. I mean, always great seeing you guys. Beautiful night, right? It's the perfect Chicago. We call it Indian summer. I don't know if we're allowed to say that anymore, but like just 70 degrees, just beautiful. Yeah. So that was a great time.
Have you done that? Have you done the right field rooftop thing?
I like 20 plus years ago, I did a rooftop, but not as nice as the one that you guys had. That was a nice setup.
It exceeded all my expectations. I mean, I literally just very selfishly wanted to do it because I've been watching it on SportsCenter my entire life, right? So I just wanted, seriously. Yeah. So like now I make the rules around here. So I was like, okay, we're going to do what I want to do. I didn't think, I thought it'd be fine, but dude, that was unbelievable. Those brats that we were eating. Oh, shout out to the Polish. Oh,
yeah, I had my fair share, but you pay a price the next day, but whatever.
I was going to say, I ate so many and I wasn't even hungry. I went on like this, I was so disgusted with myself after that. It was it was terrible, but they were so good. Extra onions. Oh, forget it.
Guys, the link to Righty's site is in the description on YouTube. Check it out. Wall Street Zen. And Righty, thanks for coming on. We won't talk to you, I don't think, before the end of the year. So happy New Year, happy holidays.
Yeah, same to you guys.
we'll see you, and we'll see how this prediction shakes out.
Yeah, we'll come back in January and see if the market did sell off in January as you're expecting. I guess we'll see.
Yeah,
we'll see.
I look forward to you telling me how right I was.
All right.
boys.
Hey,
Okay.
you know I dish it. I will give you love as well. Don't forget that. Thank you so much, Roddy. That was fun.
All right, boys.
Adios. Steve
All right.
Reitmeister.
Yeah, good stuff there.
Shout
It's
out, Righty.
9:32. The market is open for those keeping score at home. And before we bring on Sam, so we talked about China, kind of the story of the day. A couple
And
other
Real.
headlines. What?
And Real.
And Real.
Yeah, Real is absolutely ripping. Shout out to Steve Strazza. Another one. Steve Strazza is on Fuego. That's Strazza getting his flowers.
Text
Getting
the
his flowers.
sis. Tell her I think about her like almost every day.
Little sis getting a shout out on the morning show. Little sis works at Real. She's worked there for years, 3-4 years, 5 years, something like that. The Real.
It's awesome.
Yeah, shout out little sis. I was asking my mom, because my mom was in town this weekend. I was asking my mom if my sister still has all her shares, and she has no idea. She's like, I have no idea.
I'm sure she does.
I'm like, does Carolina still have all of the, and I hope she does, because she definitely owned a bunch on the way up.
Yeah.
And then it got destroyed. So I'm hoping that she hodled those shares. And I think she probably did, because I don't think she's sophisticated enough to be like trading her own company shares. I think she was just hodling and accumulating.
I'm sure.
Yeah.
When you work for a startup like this, like they came public, a couple of years back, probably 19 or 20.
Yeah.
That's a lot of the comp structure. It's awesome. You get in at one of these companies early on, and a lot of people get equity. It's really cool.
Dude, before you know it, my sister's going to be in here schooling us on she actually does bring some good value. We should have her. She's like an expert like at watches. Like she studied in Switzerland, like, because she worked at Cartier for a long time. So like they would send her to like watch school in Switzerland so that she knew, so she knows about that stuff. So if you're ever looking for a watch, you're making all this money, so you're probably shopping for a watch. I know I am. Find something you like and then send it to her, and she'll fill you in.
Update on the China positions. We just sold 3 doubles, and we're 5 cents away from selling the 4th.
Yeah,
that would be nice. And then we staggered the expirations between January, February, and March monthlies across the 4 positions. That was absolutely by design, right? So now we have at least 1.5 months on the shortest position for it to keep working higher, right? Free ride. And on the longest ones, 3.5 months for these to turn into multi-baggers. If any of them turn against us, we don't lose.
If you're in breakout multiplier, you know what Steve's talking about right now, and you're probably doing the same thing as he is, right? And you'll get an email or several today about this. So stay tuned for that.
This is like a piker move. This is only a double. It's not like SoundHound that was up 25x.
Yeah,
right?
No,
so this is just
but this is a good example of exactly what we're trying to do, right? Like these are fresh positions. So we track that time to the double, because the quicker we get the double, we take our capital back and then we redeploy it, right? So we got these doubles in 5-8 days, depending on when we put them on.
Calendar days.
5 to 8 calendar days. That money's back, right? These are now flat positions. We have our capital back, and they have up to 3.5 months to turn into multi-baggers. So I think we're sitting pretty.
And this isn't like we're not shilling anything, but like there are people who are interested in joining this party. So Spencer, if you want to drop a link where they could join Breakout Multiplier and get live access to these trades, because
I'm gonna keep talking
pretty
about
good.
Yeah.
It's literally just breakoutmultiplier.com.
Hey, this is how we want to start our Mondays.
Is it breakoutmultiplier.com?
Yeah, that's
cool.
That's literally it.
What better way to start a Monday than with 4 stimulus doubles? Thank you, China.
Imagine hating Mondays. Like,
Love
that must suck. Like people, I mean, I guess I have hated Mondays in my days before, but like I haven't hated Mondays in a long time.
No, Mondays are great. Mondays are really some of the best days, I think.
Yeah.
Yeah.
Monday.com, right? Is a Israeli software.
Yeah, it's project management.
I'll bet that's got an Archie base.
Having a really good year. Okay,
Dude,
before we bring on Sam, some quick headlines besides the China stuff. You know what else happens in bull markets? We're talking about IPOs with Kenny last week. We haven't talked about M&A a whole lot. It hasn't been a whole lot of deal flow. Got a big one. big one today, an all stock
Spencer,
deal.
I overheard what you were saying, but I didn't have my eyes on the screen. Did you show a graphic of annual IPO count? I heard you make the point that
that was like
2020.
Thursday. Yeah.
Yeah, so 2020 and 2021 were crazy. Like we're
Yes.
nowhere as close. I think we had over 1,000 new issues in 21. So 2020 set the record, most IPOs in the year, wasn't even close. And then 2021 topped it. And then we went into IPO winter. There was like nothing for 2 years. And now we're back. But this is like first, second,
Right.
third,
And Steve, those IPO numbers don't even include SPACs. So like it was insane. But yeah, deal flow is picking up. We have a big deal this morning to talk about. WPP and Omnicom. These are like two of the largest advertising companies in the world, and they're essentially it's basically a merger. It's an all stock transaction. So
these are ad agencies, no?
Yep, these are ad agencies. They still exist.
Yeah.
Facebook and Google might command 90% of the online ad market, but ad agencies still exist.
All right, so check out this in my news feed. Michael Saylor is speaking on, I believe DDTG is the Davy Day Trader.
I'm sorry, I misspoke.
Podcast.
Omnicom and Interpublic. My mistake. I said WPP.
Michael Saylor out here doing a lot of media.
You notice?
A lot of media, like every day, multiple places.
By the way, last week when I was like, oh, Michael Saylor, Anthony Pompliano, and Scaramucci were all in the same place, and you're like, where's Novogratz? Novogratz is there too.
Sounds like the beginning of an American Greed episode. I'm just kidding.
Oh, that's so rude.
I'm kidding.
First of all, I just finished Anthony Pompliano's new book. Excellent book. I think it's How to Live an Extraordinary Life. Great book. And I'm doing the same thing. He wrote like 60 letters with life lessons for his kids, because I think he's got 2 kids. I'm doing the same thing.
That's nice. You can write nice blogs. Yeah.
Like blog posts for my kids. Yeah.
Should we bring on our resident biotech expert?
I think we should. The fact that we have a resident biotech expert is so awesome, because I am definitely not that person. Steve Strazza, definitely not. And Spencer, obviously, definitely.
Oh, no, I know more than you, for the record.
Just because you're from New Jersey doesn't make you a biotech expert.
I know more than you.
You're a resident, like, diner correspondent. We'll give you that one.
All right, Sam.
Diners and delis. It's what New Jersey does.
Yeah, basically.
Seriously.
Dude, the best things about New Jersey in the whole world, Taylor ham and disco fries.
I don't like disco fries. I can't do the disco fries.
You don't like disco fries at 3 o'clock in the morning hammered? Not that I've been in that situation in decades, but in the old days, those disco fries where you dip it in the gravy. In the gravy. Whoo!
So
in Kansas, they don't got disco fries in Kansas.
No, no disco fries. We just go to McDonald's in the middle of the night.
So before we segued to talking about Spencer in New Jersey, we were saying nice things about Sam. And Sam, you've done just like a masterful job of kind of making it your business to know what all of these strange little biotechs do. And I think it's fair to say you're more or less in the family business, right? In the pharmacy business. So there's something there, right? You have a little more edge than the rest of us in this space, but I think you're really interested in it. Like you found a passion for this industry group of stocks. Talk about that.
For sure, yeah. My family is definitely not developing drugs or anything. More have an expertise like in medical billing. I can tell you all about United Health, Cigna, and CVS and their insurance businesses. But what I do know about biotechs is this Recursion Pharmaceuticals is a very interesting company. You hear all about artificial intelligence and biotechnology. Recursion Pharmaceuticals kind of encompasses AI and biotech, having a baby today. And it's ripping today, up 12.5%. This one's still sporting 21.5% short interest, almost 10 days to cover. I think
this is AI. This is AI meets biotech?
Exactly. Yeah.
Like how?
Isn't that a hot narrative?
So it's got to be something genomics then? They're like using AI to like data mine? Is that
exactly
something like that?
Yeah. And they've been doing that for years. So it's like,
Yes,
I'd be lying
but
if I said this was novel, but it seems like they're doing something right.
the companies that do this best are going to be major winners, right? Like,
sure.
would you like this is the future of biotech, right? Like data mining, all this genomics data, and kind of creating new drugs off of it, and it's only going to increase as we get more data and AI. The power of AI improves, right? And I'm not saying all these companies are going to be winners. There's going to be some huge losers for sure, but the ones who nail this and become the leaders in this space, like if we find them now, we're talking not about 10 baggers, but these could be some of the best trades from a secular theme, right? In healthcare moving forward. Would
Without
you
doubt.
jump?
I'm working on a new report covering these genomic stocks
Love it.
in the merging of biotech and AI. I think it's going to be a big theme for the rest of this decade.
Yeah,
I
I'm
plan
with
on
you.
making a lot of money from it.
I think that's great. So we're going to figure out what the best names are now, get ahead of it. And this is the perfect time, right? Because genomics to me is one of those groups that has been absolutely decimated. So people got so hot on this theme 10 years ago, more, right? All of these biotechs were coming public with genomics names, DNA sequencing stuff going on. Like that was a major, I would say, kind of euphoric phase there in the healthcare industry. A ton of them have been weeded out and have completely disappeared. If you look at the charts of some of these genomics companies, I'm talking 70, 80, 90, 99% drawdowns, right? So that's kind of like when you want to start looking and building lists and getting interested. We're washed out here. We're totally washed out. As soon as we get a trend reversal from some of these, I think go time. Would you jump
I
this
couldn't agree more. It's a lot like the China trade you were describing earlier in the show.
Sentiment.
Complete washout.
Right.
I'm looking to buy the trend reversals. I'm not really trying to pick a bottom or anything. That's not my strategy. But once
So I'm
those
looking
trend
at
reversals are in, I think there's tremendous upside.
And there's ways to do this. Like Fonz, if we have an RX chart with the VWAP from the March high, that'd be awesome because I think this is a great example of how to scale in to a base, how to accumulate a stock, right? When it's trying to break out or print that initial trend reversal. Okay. So if you look at RX, you could draw a really clean resistance line around 16. We got the highs from 23 and 24. But if you drop that VWAP from the year-to-date highs, we're gapping above it right here today, right? So if you want to scale in to something that we've seen this pattern a million times this cycle, right? To the point where I don't know where it's going, but I know where this is going.
You've been front running them. Be honest.
Yeah, exactly. So what Sam means by that is we're jumping these bases. We're jumping them and we're getting earlier entries than we normally would. And the way we would do this is by dropping that VWAP here from the year-to-date highs. This would be the first entry point. But then you wait for confirmation at those highs at 16, but we're in $7 lower initially. That really helps, right? When you go back and you track your performance, you say, oh, I got half of my shares at 9 and then the other half at 16. Then your average cost is whatever, 13, 12, 15, right? And your gains are much better. You're improving your risk reward by getting a better entry. So,
totally. And that's what the institutions are doing. So it's a tried and true strategy. And also, like, I think it kind of resolves the FOMO for a lot of people. Just having a small sliver of a stock they are really interested in, and they're going to kick themselves really hard if they miss the trade. So you have that going on for you, and like it doesn't have to be a big position at the first, and you can just really make it a large position once it gets going. But I totally endorse your strategy there. That's great.
All right, what else you watching?
I'm watching a lot. I really am excited about this Marvell. Have you heard about this Marvell?
I haven't heard anything. I've seen it. So back to the semis. Yeah.
Yep. Big old gap and go last week.
Sweet.
Now you're getting some inside days. I think it's going to be followed with a continuation higher. 130 is the first stop. But what's going on here is this company is enabling Amazon to directly compete with NVIDIA. Amazon is in the business of selling GPUs now. And I think I've seen NVIDIA's momentum rolling over on the monthly PPO for months now, and I had no idea what was going on there.
Yeah.
I think this is it. I think NVIDIA has competition, and I think it's a hell of a lot easier to sell it here than buy it.
Amazon. I wouldn't have guessed
Amazon.com. Yep.
So Marvell's making the chips for them,
Exactly. Yep.
the manufacturer.
So yeah, their silicon sales have doubled year over year.
Wow.
They expect that trend to continue. This one's so hot right now.
You know, it goes right back to that theme of who's going to win from AI. I don't know, but probably one of the guys with the most money. You know,
Exactly. It's hard to bet
Amazon.
against Amazon.
Amazon, Google, Apple, Meta. Not many companies have that ability or opportunity to take a shot at making a GPU, right? Amazon could literally
Amazon doesn't give a shit about the business. Like Jeff Mackey's always talking about them not caring at all about retail.
they're going to spend
It's a similar situation here.
They're going to spend tens of billions of dollars trying to make a chip to compete with NVIDIA. And there's probably a 5% chance that it works out. And when it doesn't, they just say, and then they write it off. It's a loss leader. And they, X out that business unit and move on.
Exactly.
And then they take a shot at the next thing. And that's how these companies stay on top. They make moonshots.
JC, you like this gap and go, bro?
You know I do, my man. Especially, this is the structure of the market. This chart right here looks like the software index. It looks like Bitcoin. It looks like the Dow Transports. It looks like small caps. I mean, we see this pattern again and again and again. Tesla's running into this moment as we speak. Like this is just the structure of the market. So when you have a gap above those prior cycles highs and just absorbing all of that overhead supply on one shot, I mean, very few patterns. I mean, the gap and go, correct me if I'm wrong, Strazza, the gap and go pattern might literally be the most bullish pattern of them all.
Yeah, probably.
Particularly at a look. It's not just the gap and go, it's where the gap and goes happen.
Yeah, look at this. Perfect.
Look at this, right?
And I'll do you one even better. Throw a little intermarket into here. We're over here talking about semiconductors. Deserve a bounce here, right? Semis look bad, right? They got to dig in here, rebound. Probably reassert some of that old leadership. Probably won't be a top. In other words, most semiconductors right now don't look like this MRVL chart, right, guys? This one looks like a software stock breaking out to new highs. And then we're talking about its industry group struggling and probably about to do better. And this is one of the leaders, one of the ones that looks different, already making new all-time highs. Well, what if the pressure comes off semiconductors at the industry group level? Well, you would look to one of these leaders to say, these guys are probably continuing to make new highs.
Very well said.
Do you see this app loving, dude?
Listen, it's one of those stocks where I get pissed when I look at it.
It looks like the Marvell, but before it was a gap. And well, the reason I bring this up is because it's exactly the same as what Marvell's doing.
And
right?
I love to bring up the NVIDIA gap and go. I mean, what better gap and go than that? Like this company
the one
went
from
on to
a couple
become
years
the
ago,
most valuable company in the world after that gap and go.
Yeah. Man, and then AppLovin is a software, right?
Yep.
Are you guys interested in this Sphere Entertainment?
I haven't looked at it for a minute. Let's see.
That's the company that owns the Vegas thing.
Yeah, what's going on there?
And isn't Madison Square Garden a big shareholder or something?
Yeah, it's the Dolans, right? Like they brought this company public. Dude, this one's spicy. I think something's coming here.
4 down months in a row.
What about Steve Cohen paying Juan Soto?
Dude,
you're killing my recess. Can we go to recess, please?
All right.
You're killing me.
We're going to recess,
thunder, Sam.
Forget it. We're going to
blew
recess.
my mind. I couldn't help myself.
I'm going to recess. Forget it. All right, let's go.
The internet wins again. The internet is so good. Fantastic. This is why the internet was invented, for moments like these. I got three slides here. Slide 2. One, Stephen Cohen, Uncle Steve, coming in hot. This is the press conference. So this is what he looked like, and they asked him about who the other bidders were, and he just started laughing. Next slide. So good. Internet wins again. Shout out Stephen Cohen. We love you. I don't even like the Mets. I just think it's hilarious. It's so good. And then the best one of the night This one comes from, I believe it was Sunday Night Football, if I'm not mistaken. You can go to that next one, and you could zoom in there. It says, me waking up my 8-year-old to hit the batting cages at 4 o'clock in the morning after Soho announces he gets $750 million. That is a $750 million to play a game.
Yeah,
So,
I mean,
shout out.
it's actually more than that. It's with escalators and stuff. It's like 805 is like the total value, which
Good for him.
which just to put that into context here, 805 million is worth more than all but 4 cannabis stocks. It is worth more than 3/4 of the solar stocks that are out there.
Uh-huh.
And it would make Juan Soto the 132nd most valuable cryptocurrency. So
I love
People
to
don't
see.
mention all the taxes he has to pay on this money.
Right.
And Spencer, what do you think about the Yankees getting outbid here? I mean,
Look.
they put up a similar offer, and Juan Soto just gave them a big middle finger. Went over to the other side of New
Okay.
York.
All right. Honestly, like I'm a little annoyed at Juan Soto. I'm not even mad at the Yankees. They offered 760 or something for 15 years. I can't be mad about that. They got outbid by a guy who has like 10 times the net worth as our owner, right? So I'm not mad. I think it's insane. I think this deal is insane. Okay, frankly. He's a great player. He's not worth that money, but he's a great player. So
Couldn't
I'm
this
bummed.
be a Bobby Vanilla situation again?
I bummed that I'm not going
You
to get
just
to
call
watch him
Bobby
anymore.
Vanilla?
No,
He's
isn't it
That's
Vanilla?
so good. Bobby Vanilla.
yeah.
See what happens when you got these young kids come in here,
No,
Bobby
no.
Vanilla.
It's because he lives in Kansas, JC. He doesn't know.
I don't know who this guy is. I see you posted every single year, though, Jason.
Yeah.
I think this is going to be a similar situation.
Maybe. I don't
Maybe.
know. I think it's nuts. I think
Listen, Mets
I'm
fans.
not even mad. I'm not
But
even mad.
Spencer, hold on. Being a New York person, like you're well aware, Mets fans been eating shit forever. Second to the Yankees. Right? Like this is nice. This is really nice. Just shout out Mets fans. They've been waiting a long time for this. Okay. And God bless America. And shout out MLB. By far the most capitalist of all the major sports.
Yeah.
The best
I
to
think
gamble on as well.
I think it's 50-50 that this deal ends up being like a train wreck for them, but also Stephen Cohen doesn't care because he has more money.
Right.
So
Doesn't matter.
this, it's a different game, right? But I'm bummed that Juan Soto just chose the money. I'm honestly surprised he chose the money. I thought maybe a little bit less money with better chance of winning, you might pick the Yankees, but he didn't do that. I'm bummed. But I can't not be mad at the Yankees for getting outbid by a guy who has so much more money than they do.
And it's going to keep happening because this is now a new era in baseball where the Yankees are not top dog. They're going to keep
that's true, but also this contract is freaking insane.
Absolutely. But like you said, it'll probably happen again.
Maybe.
There's more where that money came from.
There is more where that money came from. That's true. I mean, I'm not like dooming. I'm not dooming gloom on the Yankees over here. We just came 3 games from the World Series, so yes, I'm surprised he chose the money because again, the Yankees offered 760. 760.
Well, it seems like he's kind of bearish on the Yankees, right? That's kind of the only way to read it, right?
Dude, if
Or
I'm ever a
bullish on the
billionaire,
Mets.
which I doubt it, because I'll call it quits probably beforehand, but if I'm ever a billionaire, multi-billionaire, and I could just buy a sports franchise, I would be the best owner ever. Think about how much fun we'd have if I owned the sports franchise. Think about that.
I wouldn't want to do it.
We're drinking wine, you know what I'm saying? Like, we got good eats, Strazza with the caviar in the corner and the champagne. He'd be like, cheers to me, be like, nice work, Jay. I see you.
Maybe. I think
A lot of work.
he's not
One more
worth
time,
that.
speaking of chasing the money, I want to just go back quickly before we hop on the app love in there, slide 2. If you like making money and you see this app loving, Marvell is doing the exact same thing that App Lovin did. Like literally the exact same thing.
I don't know.
What do you mean you don't know? It's the same pattern.
This thing's up like 5,000%.
It's
I
also a software
understand,
business,
but when
not
it
a
originally broke
semiconductor.
out, Marvell's doing that now.
It's gonna break
Don't be
again.
hating on Sam.
No, I got you.
Don't be hating on your young Bobby Vanilla over here.
Okay, so what? I watched the new Vince McMahon documentary on Netflix, and I really
Was it
enjoyed
good?
it. It's done really well. It's done by Bill Simmons, old ESPN writer. He makes a
Really?
bunch of films now. Yeah, it's excellent. Really good. Really enjoyed it. What a drama. That whole family, that whole company. I mean, a wild story. You know, say what you want about wrestling. Love it or hate it. It's an interesting story.
Steve, I think we're like 3 or are we 4 episodes into The Sopranos now. So
And
You like it?
that's yeah.
You
Oh
like?
yeah. Actually, you know what? It's rubbing off on me. I've started dropping the vowels on my because I went to the store and I bought some Capicola and I bought some
Oh, yeah.
prosciutto.
Yeah, you're gonna start talking funny now.
It's really rubbing off on me.
That's
So,
good. Who are your favorite characters so far?
Tony's mom is my favorite character so far.
One of the greatest characters ever.
Yeah.
Amazing.
I have the biggest crush on Tony's daughter. She's perfect.
Meadow? Yeah, all right.
Yeah.
Yeah.
I saw her in Vegas at a show.
How was she?
Cool.
You know, like it's always kind of like one of those things where
Capicola, whatever.
yeah, it's one of those things where, like, you know, she's she was like situationally hot. Like, we were watching it, it's a bunch of dudes, and there's like one girl, you know, she's all right.
All right. What's today? Today's Monday. We got chat requests live at 1:00. And like I said, if you're in Breakout Multiplier, keep an eye on your inbox. You're getting a note. Actually, you may have already gotten a note. Frankly, we got some trades to talk about. So there's that. Thanks to Righty for hanging out. We'll be back tomorrow with Todd Sohn. Thanks to the chat. Smash the like. Go make money. And
Happy Monday, everybody. But the best day of the week.
Yeah. And Aries Spears, the comedian Aries Spears, have you seen his Tony Soprano impression? It's so good.
No.
All right, we'll talk about it on tomorrow's show. We'll drop the link. I'll send it to you guys. The best Tony Soprano impression of all time.
okay.
I can't take no loss. I don't even know what it costs. I hit the